Will these giants continue to spend on AI? Will it continue to rally big cap tech? We're going to find out a lot next week. So is this a good indication that the tech spend the race is still on?
I think so. I feel that this first month of the year has felt a lot like the first month of last year, except for you remove political overhang and you actually have the rest of the world trying to be more like America. At least Becca's talked to us about Davos because it's fascinating, I think, the impact that Trump's having on the rest of the world. But yeah, I think so. And if you think about Meta, they were the first one really a year ago to get out there and talk about it. It was probably about 18 months ago, but they started to talk about the CapEx plans. And they were in the year of efficiency. It was a question of, well, suddenly the stock that was rewarded for cutting back on CapEx in the metaverse going to be rewarded. And they absolutely have been. And in fact, they've outperformed the Mag 7 aggressively so far this year. So I like this story. I like the message this week from both the White House and policymakers is we're not even sure who's going to fund this. We've got a few people that have stepped forward to be shepherds of this process, but it was a week where AI and the prospect of spending and again the broadening of that trade. So I think it's very good for infrastructure. I think it's very good for some of the chip players that build the infrastructure. And I think this is a very important announcement. And I think kudos to Meta for getting out there first because I think other folks want to do it as well.
It almost felt like Larry Ellison was up there with SoftBank and announcing Stargate, and Mark Zuckerberg was like, you know what, I'm in it too. $100 billion, here I am. And so this comes, there's a series of announcements here, a cadence at this point. So if there are any doubts about the AI spend and whether or not that would power the rally, I don't know. Has that been put to bed in your view?
I think it's been put to bed. It's always short term. It's always looked through that lens of maybe a month out, maybe 2 months out. But the good news about CapEx is that it's deflationary. So you have more productivity, you have more efficiency, so it actually brings down inflation. So if we can get CapEx going where we think it's going, inflation should come down as well.
Well, I hear what you're saying. I think there's a time element. I agree with you that if AI and everything related to it can increase productivity, I think that's where you're going.
And efficiencies.
Right. It's
right?
Gonna,
so that
inherently is deflationary.
Yeah.
But in the short term, we're building infrastructure. We're building data centers. We don't have enough workers. We don't have enough materials. I see that as being inflationary. So reflationary, right? Good for growth and pushing up inflation. So
I'll put a button on this. And so if you can increase growth,
we're not going to just fight it out all night.
No, no, because we're both.
Just got my vote. He's like, I'm going to have the last word, and then we're going to keep moving on.
Yes.
Is what I heard.
Yes. So if you can increase growth by 3 to 4%, you could actually bring inflation down ultimately by a percentage point as well. So if you could increase growth to where we need to be with all the CapEx spending, you could get a percentage point out and actually reduce that percentage point in growth that you got to the upside in inflation to the downside. So ultimately, I think inflation it will be deflationary, but I understand your reinflationary worries.
Yeah, I think it's just timing. And if we're trying to get interest rates down, because Trump declared that will happen, and inflation down.
He knows a lot about interest rates, apparently.
I don't think that's going to. I don't think it's going to happen in the short term.
More than the guy in charge, I think is technically what he said. But
yeah.
DeepSeek has caught the attention of none other than Meta CEO Mark Zuckerberg, but not in the way you would have thought. During Meta's recent fourth quarter earnings call, Zuckerberg voiced a cautious awareness of DeepSeek's novel approaches in artificial intelligence and how its existence may not change the already solid relationship he has with Nvidia and Jensen Huang. But what exactly does this mean for the tech industry, and how could this affect the stock market landscape? Welcome back to Investocracy.
Anyway, back to Meta.
Yeah, well, I'm with you, Rebecca, in terms of order of operations. And I do think that is important, right? It's important in math. I think it's important in economics. And for us to kind of keep in mind how this whole situation functions. Along that same line of thought, I do think that the posturing has kind of shifted to, are these hyperscalers getting too far over their skis in terms of CapEx spend? To now I think there's FOMO in terms of, are my competitors going to actually outpace me, outproduce me, outscale me, and reach those efficiencies that Steve was talking about before I do, creating more of a moat for them and a competitive disadvantage for me?
So at what point is that a bad thing for the big cap tech trade? Not for a long, long time.
I don't think so. And particularly not for the chip makers. I know you're going to ask me about NVIDIA. I mean, I think, the concerns that we've had, the stock popped about 7% and then has been kind of trading off a little bit. But I think it kind of reinvigorates that trade, that perhaps some of the concerns about sales growth going forward perhaps are a bit overdone in the short term, at least.
For a name like Meta, we will be able to see those efficiencies, right? We see that
They were the first one?
Exactly, to actually outline this is what we spend, this is what we get back. For a lot of other companies, we have yet to hear that. So, in terms of your point about there is a time element to it, to the investment and then what follows.
Right.
Are we going to hang on to this trade during that period?
I mean, I guess the question is, what else looks attractive and has a catalyst for growth, right? So these companies are, I think most would argue, richly priced, if not outright expensive, and everyone owns them, so that makes them risky to the downside. But if you put your money somewhere else, where else are you going? And we can talk about overseas and is this finally the moment or small cap, but it feels like a lot of people want to keep a good leg on this stool.
Yeah.
That makes sense. Because long term, it still seems like the right play.
Yeah, I think Stargate might have bolstered the emphasis on what Meta said today. I think if anyone's earned the right to get out there and say it's Meta, and if you think about the ability that they had first over anyone other than Nvidia to say, hey, we see a benefit here. And again, if anything, the pushback on the CapEx spend has not necessarily been around the hyperscalers. It's been around what's the competing factors with some of the biggest players, the hyperscalers, with Nvidia to develop their own chips. But again, in the short term, I don't even think that's an issue for Nvidia. I think this is all great for Nvidia, by the way. It was a week when semiconductors, they had a tough day today, but if you look at the semiconductors trade, semiconductors are doing what they did last year. They're up over 11% year to date. The dynamic around those that are really involved in the infrastructure build out, and it's been Broadcom all over again. But I think this bodes very well for next week. And remember, Meta's out on the 29th, and they will tell you a lot more about this and the profitability.
So then, therefore, this should bode well for the markets overall.
Yeah, I think the markets are reliant on mega cap tech and Mag 7. So whichever way they go, ultimately the market goes. But to your question, Google has a path for the spend. Amazon has a path for the spend. Apple has a path for the spend. There's only those tertiary names that don't. So you can make a case that they're just fostering, if the market is reliant to the tune of 40%, 30 to 40%, resting on the back of the workhorses, which are mega cap tech, this is good news for the market. This is good news for the tech sector.
So which of the big cap tech companies is your favorite at this point?
I still think it's NVIDIA, particularly after this news. And I think they're squarely, I know they've been knocked down to what is a third now, but I think that they still are the engine that is leading to this growth. I will, admit that, yes, you worry about the hardware. I do think they've integrated themselves so that there's really, a programmatic build out around that. But at least for the time being, I do think NVIDIA, to me, has like the most upside.
Mark Zuckerberg rightly admits that DeepSeek is novel in quite some aspects as Meta attempts to digest it and learn. Meta itself has been performing robustly, with fourth quarter revenue hitting $48.39 billion, surpassing analyst expectations. Yet, the ripple effect of DeepSeek's innovation has economists adjusting their spectacles as concerns loom over market leaders like Nvidia and the broader tech market, as seen with the NASDAQ 100's significant plunge. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
You own NVIDIA. Steph's got a move that I'm going to get to after this because it plays right into what we're talking about here. But how are you assessing the damage here? Morgan Stanley today cuts the price targets of a number of semi stocks, including NVIDIA and Broadcom and Marvell and Micron. NVIDIA goes to 152 from 166, whereas Baird today says they'd be buyers of NVIDIA on this dip.
So 152, just to use that number on NVIDIA, would still be a nice 20% rise from here, which would indicate that you should not sell all your NVIDIA. What you should do, though, is evaluate risk. And I watched the show yesterday. Obviously, I'm here today. We are all talking about risk management. And for the last 2 days, I've been talking to a lot of portfolio managers within Cerity Partners, outside of Cerity Partners. There are very few. In fact, I don't think there's anybody who said that now is the time to back up the truck on AI. By the same token, nobody is saying sell all these names outright. That's not the conversation. The idea that these are bust in some sort of post-1999 way is not what people are talking about. Now, maybe that's wrong, but we'll find out. What people are talking about, and by people, I'm referring to professional portfolio managers, is this. Did we go into the end of last week with simply too much risk? Were we too blasé? Consider Oracle for a second, one of the stocks that's in the headlines the last 2 days. It shot up like a moon rocket last week on Project Stargate, and now it's given that all back.
Meta's projected expenses for 2025 anticipated to be between $114 billion and $119 billion, reflect an increased focus on capital expenditures between $60 billion and $65 billion, underpinning strategic investments in generative AI. This decision aligns with Zuckerberg's belief that investing in infrastructure will provide a long-term strategic edge, and it looks like he will not change his approach anytime soon. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Do you have as much confidence today in NVIDIA as you did last week in their ability to beat and then continue to, if not raise their guidance to the degree they had in the past, because most think that that's not possible anyway, but enough to justify the excitement and the move in those shares?
Well, yes, I do. I mean, we've been doing a lot of research on this, and one of the things to understand is that, like, training consumes a lot of computing power, but inference, especially at the edge, i.e., when you use you do something on your iPhone that requires any kind of agent AI, any kind of AI function, that inferencing function could be multiples of compute power needed. The interesting result, DeepSeek is run on NVIDIA chips. It's just run on last generation NVIDIA chips versus, say, upcoming generations or highest end. Blackwell is coming from NVIDIA. We think there'll be plenty of people pursuing both ends of the AI spectrum, right? There'll be some still pursuing the absolute high-end cutting edge. Think about internet search. There was Yahoo. Then there was Google. But in between, there were Ask Jeeves, Alta Vista, Bing has been around. That battle to be the ultimate dominant AI model is going to continue for a while still. And at the same time, with the lower cost, a lot of more pragmatic, practical applications can be possible, particularly through software and hardware.
Meta remains a formidable player, showcasing strong performance even amidst the evolving AI landscape, hinting at promising forecasts. Mark Zuckerberg remains firm on his partnership and investment for NVIDIA moving along in the future. But what are your thoughts? Will Meta stay standing firm, or will startups like DeepSeek herald a new era in AI? Share your thoughts. Finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.